let's talk about what's happening in the pre-sale market right now, because it is bigger than people think and it's going to shape Vancouver real estate for the next several years. The developers are in real trouble. Right now, there's anywhere between 2,500 to 3,500 completed condos sitting totally empty across Greater Vancouver and the Fraser Valley. There's no buyers, there's no renters, there's just brand new units collecting dust. So these numbers are basically double than what we saw a year ago. And so that's just not a slowdown. This is the worst oversupply that we've actually seen in about 25 years. So what happened? Why are developers stuck? And what does this mean for buyers, sellers, and the entire market moving forward? I'm going to break it all down. So here's what shadow inventory really is. When you hear numbers from the real estate board, new listings, sales, month of inventory, none of that includes developer inventory. Developers don't have to report anything. They're basically the wild west of data for condo inventory. So this is a massive pile of unsold condos. It's called shadow inventory. It's units that exist but don't show up anywhere on official sites. They're not listed for sale anywhere. They're just held back in private by the developer. So they're not going to be on any official stats anywhere. Now, these best estimates come from CMHC, Rennie Spring 2025 report, and both are showing the exact same thing, between 2,500 to 3,500 completed empty units, and that number is still climbing. So this is the biggest oversupply we've seen since the early 2000s. Okay, this crisis isn't everywhere. It's concentrated in specific neighborhoods. We got Burquitlam. That was the hottest neighborhood, pre-sale after pre-sale. There were so many parties by these developers, absolutely wild parties with fine food, free alcohol. Every single realtor was going to these things. They were giving away crazy gifts, and the sales there have completely stopped. Then there's Brentwood, there's Willoughby Heights, Surrey Central. This is easily the hardest hit area of all of them. Surrey Central alone has hundreds of tiny investor grade condos just sitting unsold. You know, developers who were pre-selling these units at $1,200 to $1,350 a square foot 2 years ago are now facing a reality getting anywhere between $850 to $980 per square foot, and sometimes even less. So you don't need a calculator to know the math doesn't work on those condos anymore. Now, how did we end up here? There are three major reasons the crisis exploded, and that was dirt cheap interest rates from 2020 to 2022. Money was basically free, and developers were borrowing aggressively because of it. Investors bought aggressively because of this, and also FOMO. Like, every single person out there thought if they didn't get into the real estate market right now during the pandemic, that they would never be able to afford a house. Countless clients of mine were getting help from family and friends just so that they could have a chance to get into a property. Projects were getting launched almost monthly. Everybody thought inflation would push prices higher forever, but man, we were wrong. Now, pre-sale pricing got completely disconnected from reality. These developers were always pricing at a projected future value, and those values basically never came a reality. If you're buying it as an investor, they didn't care about the layout, the size, the livability, sunlight, storage, parking. All they cared about was small, cheap to build, the lowest price that they could possibly pay, high rent potential, also easy to flip. So we ended up with a ton of 500 square foot shoe boxes selling at luxury prices. Meanwhile, resale condos, actual livable condos, never came close to those price levels. So the investor pool is obviously evaporated. They're completely gone. When interest rates jumped in 2023, 2024, investors basically disappeared overnight, but that just wasn't the only reason they disappeared. We're having more restrictions on everything that you can do as a homeowner. The government's really stepping on our toes and how we can use these properties. Carrying costs has basically doubled. Rents didn't rise fast enough to keep up. And there's not a lot of people willing to pay $550,000 for a studio in Surrey with a $2,700 a month mortgage. So basically demand collapsed. It actually completely collapsed. The rental market has been hit just as hard as the resale and pre-sale market. So here's what developers are doing now. With thousands of unsold units, here's how they are reacting. They're canceling projects. We're seeing more project cancellations than any time since the early 2000s. Deposits are being refunded. Sites are being mothballed. Marketing centers are closing. And most of those, if they can afford it, those developments are being switched to rental units because it's easier to afford as a developer, and there's tons of incentives out there right now. It's way easier to get financing for purpose-built rentals right now. Cities are pushing for them. Developers are pivoting hard. Or they're offering incentives. Developers with completed inventory are desperate. We have seen free parking, free storage, 12 to 24 month rate buydowns, cash back on completion. So many incentives, just the complete opposite of how things were during the pandemic. There's also assignment guarantees. You know, a lot of these places, if you didn't read the fine print on the contract, you weren't allowed to assign it. Or if you were, you're likely not going to be able to post it on MLS. And there's going to be an assignment fee, which could be anywhere from 1% to 3% of the price. The biggest example is that 25% off flash sale in Surrey that got sold out. Every remaining unit in 48 hours. That was pretty wild. So, I mean, like, the buyers aren't all gone. They're just super price sensitive. Most people aren't making the move right now unless they A, think that they're getting a fantastic deal, or B, they've already sold and they're staying within the same market. Now, here's the systematic risk that nobody is talking about. There's a way bigger problem underneath the surface. Developers are laying off staff across the region, and it's not just sales teams, it's project managers, designers, marketing teams, site crews, and if all construction slows down dramatically, it ripples into plumbers, electricians, framers, flooring installers, concrete suppliers, steel fabricators, lumber mills. You get the idea. It will be a massive effect on the labor market that is going to rattle the economy. So this isn't just a housing market issue, it's an economic issue. If developers stop building, construction employment falls. If construction employment falls, city tax revenue falls. If city revenue falls, projects get delayed. It becomes a brutal feedback loop. And that's the part that policymakers are really concerned about. So who blinks first, developers or buyers? Right now, we're stuck on a little bit of a standoff. Developers are refusing to drop prices further because they literally can't afford it, but sold inventory is better than unsold inventory. Some developers have strict financing, and if they keep reducing their price, they're not going to be able to get their financing. Some buyers refuse to pay pre-sale prices from 2021, and I don't blame them. If you bought a property for $500,000 back in 2021 and it gets appraised today when you're trying to get financing, it's only $400,000. We have a big issue at hand here. And resale gives you better value, better layouts, and a lower cost per square foot. So I don't blame a lot of the first-time buyers out there that are just heading into the resale market. It's a much better buy. So, I mean, someone does have to blink at some point. If developers cut prices too far, they are going to risk breaching loan covenants, destroying their pro formas, triggering appraisals that kill their financing, wiping out years of work. But if buyers wait too long, they risk losing inventory choice, missing discount windows, and paying more once interest rates normalized. But I mean, we're going to see who caves first. I don't think it's going to be the buyers. I mean, we could look at that Surrey flash sale. When prices hit the right number, buyers do show up pretty quickly. What does this mean if you're a buyer? If you're shopping right now, especially for a condo, you have more leverage than at any single point in the last 10 years or more. Any single point in my 15-year career in real estate, that's for sure. So here's how to play it. You should probably focus on completed inventory. This is where the real discounts are. Do not look at pre-sale. Developers don't want to carry these units on their books for another 12 months. That costs them hundreds of thousands, if not millions of interest in their sitting inventory. So it gives you an opportunity to negotiate aggressively. You can ask for price reductions, closing credits, upgrades, lower deposits, rate guarantees, assignment flexibility. There's a ton that you can ask for right now, where if you go back a few years, every single thing was off the table. So this is the one moment where you actually hold all the cards as a buyer. And again, you probably want to avoid those brand new pre-sales that are launching today. New launches aren't discounting the way completed buildings are. Some pre-sales are offering incentives as well, but not the same as move-in ready construction. Some of the discounts that we're seeing here, extra parking spot, extra locker, maybe an upgraded appliance package if that's not in there already. But there's not deep price cuts like you're seeing in sitting vacant inventory right now. So completed inventory is where you're going to find the best leverage. So the next 12 to 24 months are actually going to set the tone for the next 2 to 10 years. We can expect fewer pre-sale launches, which is already happening right now. There's going to be more rental development. Purpose-built rentals are going to keep going up and up. There's going to be more consolidation among developers. There's going to be bankruptcies from smaller builders. It sucks. There's going to be tighter financing rules, and large developers are if they're available, they're going to be buying those distressed other properties that other developers are failing to complete on. So if you're a buyer with patience and cash, there are going to be opportunities out there. But for developers, they are literally in survival mode right now. The cost of everything is higher than ever in terms of construction costs for lumber, for hard supplies, and then the labor force is also extremely expensive as well. But those people are worth every freaking penny, in my opinion. So for the overall market, we're likely shifting into a multi-year correction for investor-grade condos, while livable, larger resale condos hold a much stronger value. Like when I'm showing clients properties, most of them are really appreciating 1,000 square feet, 2-bed, 2-bath versus 800 square feet, 2-bed, 2-bath. It's a few years newer. Anyways, that's what's happening in the pre-sale market. It's pretty serious, it's pretty messy, and it's going to reshape the condo landscape in Greater Vancouver for the years to come. If you're a buyer, this is one of the few moments where the power is fully in your hands. Make sure you're making an informed decision that's working in your best interest. If you found this breakdown helpful, hit that like button. It really helps me in the channel. Subscribe so you don't miss the next update. I'm Blake Chancey with Real Broker. If you're thinking about buying or selling in Greater Vancouver, feel free to reach out. My contact info is below. Thank you very much for watching, and I'll see you on the next one.